Let's do a little technical analysis breakdown on Apple, ticker symbol AAPL. So what I'm going to start with here is I'm going to start with the big picture and then I'm going to work in. So with the big picture, I'm going to start with the weekly time frame. Right now, Apple, we did put in those highs, 182.94, $3 trillion valuation on the company. Took out previous highs going back to the week of December the 13th. So we were not able to really break above it. Although we cracked previous all-time highs, we weren't really able to, build off that. So for example, what I mean is weren't able to really crack above it, come back down, back test those previous highs, and then start to move higher. Typically never a really good thing. Obviously, we know Triple Q's had a really, really bad day yesterday, which was the 5th of January, 2022. Insane move, 12 points, a 12-point pull, 3% day down on the Triple Q's. That's pretty serious. After the Fed minutes came out, I went through the notes and kind of looked at everything. It doesn't look good. That's not what this video is about, but it doesn't look good. So anyways, with that being said, what we have here, 171.56 on the weekly time frame. If Apple starts confirming this to the downside, let's say tomorrow we have the jobs numbers, if things start to look weak and we start to crack below 171.56, which means that we're going to put in a new low on this week's candle. So that's one of the levels you need to look at going into tomorrow, is a 171.56. If we kind of come here to the daily time frame, and I'm going to leave this 171.56 so we can kind of see that was today's lows here. We do have the Bollinger Band here resting at around 169.47. So let me look at right now what the market makers have priced in for this week's expected move. If we kind of take a look, let me take a look real quick. Market makers are still pricing in on Apple a $2.80 move. So if we really look at where we're at now, 172.87 in the after hours, 172 on the close. So we are up in the after hours about 87 cents. If we just take it from the close, 172, and we do go down those 2 points, that would take us into, this high 169.49. If we look at 2 points to the top side, 174.29. So does that really help us? Not really. Either we're going to close somewhere in between 174 and 169. That's all it's telling us. The market makers are really not expecting a move higher than 174 this week, and they're not really expecting a breakdown below 169. Now, mind you, if there is something catastrophic that happens with the jobs report numbers and we get some sort of aggressive pull or we get some sort of aggressive bounce, then the IV, the implied volatility, is going to get really wacky, and that's when the option contracts are going to get real crazy and start to move in value. Could be in your favor depending on what side you're playing on here. But if we really take a look at this, 171.56 is what I'm looking at to the downside. I currently am holding an overnight position on this. It looked good. We cracked low of day going into the market close, and then after hours, we start ramping up 80 cents. I don't like that. But what I would rather have is I would rather have us green in the pre-market, get these job numbers, have them stuff into supply, and then roll over. So what I could see happening here, if we do bring up the hourly time frame, right? This is what I can completely see happening here. This is the low here, 171.56. If Apple starts losing 171.56, I personally have a price target maybe around that 170 mark. Okay, let's get it down $1.50. I'm comfortable taking profits there tomorrow, just due to the fact that my options contracts are going to expire tomorrow. If you are playing for the bigger swing to the downside, and let's say you have expiration dates that are 1, 2, 3 weeks out from now, as long as we start building below this 171 and get under that 170, I'd be feeling comfortable enough to hold that, and just kind of use that as your marker, that 171, 172, as the ceiling. If we start breaking above that and you're holding these contracts, think about, what exactly you want to do at that point. But if we're talking about, a day trade, we're talking about a scalp, 171.50, Let's look at that to the downside. If we do have any form of rejection, let's look for a price target to start taking profits around 170, 170, 50. All depends on your size. Obviously, if you're playing 2, 3, 4 contracts and these things move, 20, 30%, you're only going to make about 30, 40, $50 a contract. So just be realistic about the gains that you're playing, that you can obtain. It depends on also if you're out of the money, in the money, or right at the money. But what I can see happening on Aapl, and this would be the best case scenario here, if we do continue to tread higher in the after hours on the NQ, right, on the NASDAQ futures, and in the pre-market, we come up to the 20-day moving average on the 1 hour time frame, right? Which is going to sit at a price of 173.82. Obviously, that's subject to change as the time passes and this kind of wiggles its way around. But for the sake of the video, 173.82 right now is going to be the 20 period moving average on the 1 hour time frame. If we come into that 173.82, even come up to 174 and start to get rejected, right, where we can't really crack above this level, and then the job reports numbers come out, there's a lot of market selling, you actively see the NQ futures being sold off. We're down 50, we're down 100 points on the NQ, and this starts to roll over this way. What you would be looking for if you're looking to add to your position would be somewhere in the vicinity of 174.39 and 173.82. So just to make that clear, if we do come up, let me change this shit around. If we do come up to the 20 period moving average, which is 173.82, or we come up into 174, these two areas is where you're going to want to add to your short position, right? 174 and 173 if we get rejected. So the stock needs to come up. It needs to bump its head, come back down, try to retest it. You need to see the futures pulling in aggressively. You need to see other tech stocks pulling in aggressively. And if everything else is pulling and getting weaker as well, to the downside, this is where you're going to want to add to your position and possibly come short. Now, where would be the estimated price target if you're looking to take some profits on this new play that you're adding to your current position? That's going to be in the vicinity of 171.56. Okay, but if we do crack below 171.56 and we get some sort of back test up here to 171.56, even if we break a little bit above it and then come crashing down again, this is where I would feel comfortable even adding more to your position here, or continuing to hold your short position to the downside with a price target of around 170, 170.50 for tomorrow. So that would be the best case scenario. What we're looking for, a green open or a green pre-market. We get that initial spike. So right off the bell, we're getting this initial spike here, right? And then we start to see a little bit of choppiness, and then we see some sort of rejection, and then we see us coming back down this way. As long as we don't start breaking 174.39, I will remain in my short position. As the day goes on, I want to make sure that we're not just hovering in this area so it's eating up my premium. I want to make sure that if we are rejected, that we are working our way back down towards this 171, today's low of day. So I want to get down in this area, and I do want to crack below it. On the first crack through below 170, 170, 171.50, you are going to expect a decent sized bounce, right? Maybe possibly back into 172.40s, 172.30s, but you want to see that get rejected, and then you want to see the follow through come down like this. That's the best possible scenario, okay? So just to make it clear, anytime you get these bounces up here, you don't need to exit your short position right away. You're already losing money as this is going up here, but you have to give the stock a little bit of room to work. Now, if we just completely blow through 174.39, we blow through that, we put in an initial top, let's say 175, we come back down to 174, and then we bounce, all bets are off to the short side. You need to clear those back up, because then it has room to run back up to 176, 177. That's not what you want to see. What you want to see is something like this. Even if we crack above it, then we come down, then maybe we try to go back again, and then we start to come down. That's what you want to see. You want to see us get back down to previous day lows, and you want to see us break that, and then you want to see the bounce, right? And then you want to see this. That's how it should look, in all sincerity. So with that being said, let's see what the future is doing overnight. Currently up 44 points. I mean, you know, it's not too much. Not too much as of right now. If you kind of look at what the futures are doing, kind of looks exactly like the Aapl chart, right? So yesterday, big drop, a lot of consolidation today, a lot of choppiness today. Things didn't really go higher. They didn't really go lower. So what we're really looking at on NQ is a rejection of 15,884, 15,946, somewhere in that area. So what we would want to see here, if these are going to continue to rip, we want to see this. Then we want to see it come down, and then maybe a second attempt, and then start to fade, right? And if we can get down to low of day and break this, you know, you will get that bounce, but you want to see the continued follow through. Okay. So if the futures tomorrow, let's say the futures tomorrow are over 15,928, right? And then they back test that 50-day moving average on the hourly time frame, and they start pushing higher towards 16,138. You know, short positions are probably going to be off. Here's the thing: you don't want to be in a short position if the NQ is, you know, plus, meaning we're in the green. NQ is up 100, NQ is up 150, NQ is up 180. The NQ is up 80 points on the day. You don't want to be shorting things as the NQ is ripping higher. So just keep that in mind. Not to say that the NQ can't be up 100 points and then pull all the way back down, but you just need to be monitoring that. So we need to be coming into this supply zone. We need to be coming into this resistance while the futures are surging, and then we need to see the futures start to die down a little bit, and then we need to see that rejection back down to the downside.